Hi, Dave Armstrong here with Monument Wealth Management. Okay, it's that time of the year again when my email inbox gets flooded with 2020 predictions. I know yours is probably getting flooded too. In fact, here's a well-worn copy of last week's Barron's with their 2020 outlooks from all the big wigs who get paid the big bucks to make good guesses. But look, everybody's publishing their price targets for the upcoming year, and every year we tend to see the same old thing, right? Every prediction is for a positive return, and everybody's guessing in the mid-single-digit ranges for returns on the Dow. Great. Okay, on the surface, that's fun. Let's take a guess. Let's publish it. I mean, I get it. It's fun. You can see how excited Tyson is over this whole topic over here. And I guess if you're a strategist and you're getting paid to have an outlook, you've got to publish some sort of outlook, right? So I get it. But here's the deal. The fact that these strategists are, for the most part, just predicting positive returns in the single digit range for 2020 is really no surprise, since the mid-single digit return range is roughly in line with the historical equity markets. So in other words, as far as guesses goes, it really doesn't get much safer than that. But let's break it down a little bit. First, I feel like no one ever remembers a guess or a prediction that's similar to what the returns have been on a historical basis, right? But it's safe, but it's totally forgettable, and quite frankly, I find it very boring, right, Tyson? See? Boring. From there, if the stock market does end up going up much better than that, a strategist can say, though, oh, well, at least I was still positive, right? And let's face it, nobody gets fired for predicting up 8% and then the market's up 18%. And alternatively, if the market goes down, a strategist can say, like, well, my guess for a single mid-range single-digit return was really reflective of the cautiousness I had going into 2020 in the first place. So, blah, blah, blah. But there are a few pieces of data that came out in a research report from Bespoke last week, and I just want to highlight some of those because while those predictions seem very conservative and safe, they're actually a lot less common than you would think that they would be, right? Given that that's the historical average. So if you look back, and this was the research they did, if you go back to the Dow, back 120 years all the way to 1900, there's only 21 years out of that 120, or 17 to 18%, where the market actually fell in that range of single-digit positive returns, which means 80% of the time, it wasn't in that single-digit positive return, right? So where was it from there? So if you look at it another way, there's been more years where the Dow has been down over 10% than there has been years where the Dow was in that positive single-digit range. 23 years for the down 10%, over 10%, or 21 versus 21 in the mid-single digit range, right? So yeah, just as much of a likelihood of being correct if you guessed that the market was going to be down 10% or more every single year than you did by guessing positive single digit returns. And finally, if a safe prediction is what strategists are really looking for, they really should be forecasting for a return of 20% or greater, because in the 120 years going back to 1900, there were 33 observations of the Dow being up 20% or greater versus 21, or 50% more times than the 21 years in the single digit range. Really interesting, right? So that leads everybody to probably asking, okay, Dave, well, great. What's your prediction? All right, my prediction is plus 8%. All right, look, have a great holiday season. To all of our clients, on behalf of the entire team, thank you for the trust and confidence that you put in us on a daily basis. I know we don't take ourselves very seriously around here, but we take what we do for you very, very seriously on a daily basis. For those of you that read and watch our stuff that you're not clients, thanks for tuning in and letting us share our opinion with you, and we hope that we continue to give you good opinion and commentary well into 2020. Finally, as a quick public service announcement, if you're a client, please give us as much heads up as you can on anything you need done by the end of the year. We're going to run a very thin coverage between the day after Christmas until that Friday, to give everybody on the team some well-deserved time off and some time with their family. So anything you can do to give us a heads up on things that you need before the end of the year is greatly appreciated. Have a great holiday season, and I look forward to seeing everybody in 2020.